Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Stefen, I have a question from Joseph. He wants to know, so let's just say that, in March or even April, we thought that vol was too high. How many months out would you be selling these straddles or strangles? What do you think? I know there's no right answer, and that's what I always tell investors, but what's your view on that?
Yeah, I think at March was the height of the financial lows. Like all the, I think AIG, I think all the financial hit their lows on March. And if you actually thought that the market was going to recover, all you had to do was sell the straddle in terms of how long you thought it was going to last. So if you thought the rally was going to last like 3 months, then I would sell like a 3-month straddle. But as you can see right here from this 1-year chart, and let me make it a little easier. You see how this red line is going down every time? Guess what? People that have been selling straddles for this whole year have been winning. So what happens is people just keep selling straddles because that's what's been winning until it changes.
But they're not winning that much anymore, right? Now it's more of it's sort of a neutral trend, right? But it's not moving. You're right.
Right. So what's happening is people are willing to take less and less premium to put on the same risk of a bet because it's worked so long. So I know as a trader, people always ask me, what's your main strategy? Well, your main strategy should be to make money. And to make money means you have to adjust all the time because people realize the strategy and everybody puts on the same bet. So, you almost have to be like, hey, at this point right here, is it worth it for me to sell the straddle? Well, I think if you feel like that the U.S. economy is going to keep going well, I would say, hey, yeah, keep selling it because if you look at the 2-year, this volatility actually hit in the 5s and 6s. So you could actually go back there again. But if you feel like, hey, the growth that has happened in the last 6 months might be slightly artificial due to all the, cash that the government has pumped in, and you can kind of tell the emerging markets are rolling over maybe a little bit, and you think the dollar will be returned to the United States, and then you might want to say, hey, look, this is low enough vol for me to maybe start buying some calls because I think the dollar is going to appreciate. And from the past webinars, I think you had some awesome guests who told your listeners, all the guys all the different strategies that you can do. But in general, the rule I follow is hey, you shouldn't have one strategy because the market changes and then you would have to evolve as well. Right. So that's basically what I do is I compare and some of the things you can do is you see this 30-day historical. So if you actually sold volatility, you can kind of see how this blue line is below the red line. That means that what you're betting on, if you're buying this volatility right now, is you're betting that this blue line going forward in the next 30 days is going to go above this red line. And if you're selling this line, you're betting that this blue line will continue and trade below this red line. And that's all it is. So you take a whole year, and as you can see, it goes up and down. If you sold volatility right here, basically you're saying 3 months down the road, this blue line is going to trade higher than this red point right here that you sold it at, and you can clearly see that it was way lower, probably 50% lower, so you made a tremendous return on it.
So, Stefen, the red line is basically a pole of the future, right? You call it the IV30, because I had a question on this. Is that correct?
Right.
It's a market pole for the future, and the blue line is actually what happened or the past, correct?
Right. That's exactly correct. The blue line measures the past 30 days. The red line is predicting the future 30 days. Now, I know Steve talked about the euro and the similar kind of bets. I think I checked out in the yen. I didn't look at it as much, but you can see right here in yen, basically people are making the same bets. So they were, selling calls right here that it was going to go down, and you can just kind of check to see like, hey, were people making the right bets? Here they were selling puts, and all the stock did was, go down. So the order flow was actually incorrect in this one. So what I would do is I would use the software to basically look at what happened, where the smart money is going, and whether like this person could have been hedging in Japanese yen, but it looks like on the British pound, pretty much whatever people bet on is which way the stock market's going. So,
Stefen, what you think is that smart institutions were quite possibly using the British pound to augment their positions without hedging, where in some of the other ones these were just hedges, correct?
Right. And you never really know that until after the fact. But, from like the block trades that has happened in the British pound, next time, I see, like, let's say I'm bullish on the dollar versus the pound. Right. And I see a huge amount of volume coming in on buying calls or making bullish bets, selling puts, then I might be inclined to make a similar bet with some guy who's actually like putting down $1 million to make the bet. So I figure anybody who is willing to put down $1 million on a call or a selling of a put, then he probably did a little more research than I have, or might have more information than me. So I try to follow those kind of orders. And if you look on the bottom left, the ticker, if you look at the company info with the ISC order flow, all those things are designed to let you know which way people are betting. Now, you can agree, you can disagree, but at least you have that information to make the kind of bets that are intelligent instead of, just, trying to guess. Like right here, like I just saw this FXI, looks like Chinese index right here. Looks like there were massive amounts of puts purchased. Let's see, right here, 36,000 puts were purchased on this Chinese index. So maybe people are not that bullish on the Chinese, and these are all opening orders. So these aren't like some huge like hedge, as in like they did it with stock or something, or they were closing, or they're doing some kind of roll. It's basically opening orders that IC keeps track of, and you can see people bought premium, $4.2 million worth, and they actually bet short $860,000 worth of delta. And let's say technically, let's look at this. Okay, it might be a little toppy. I don't know, not like a huge technician, but you can see like, hey, there is a chance that you think it might be rolling over. And if people are buying aggressively all these puts, you can see these red bars denoting like heavy put buying by retail customers, and you can see how it could actually go down. So if your opinion was already bearish, this might be a good time to put down, because the volatility, if you look at it, is relatively low. Now, let's say the same thing was happening, but the volatility was really high. I would definitely say do some kind of put spread, some kind of spread where you're hedging some kind of premium. But if the volatility is low, hey, maybe you can buy a put, wait until it goes down, then you can sell some other put against it, and then go lock yourself into a really good put spread, and you actually arb the vol because you bought the vol at the, let's see here, it looks like in the 38, and maybe you can sell another put around 60 vol.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.